Hey guys, how's it going? It's Andy. Welcome back to day 4 of the 30 days of dividend. This is where we're going to be talking about 30 different dividend plays that could make their way into my portfolio. Some of them are stocks that I already own. So far this week we've talked about Starbucks, we've talked about Walmart and Brookfield Renewable. Those will all be in a playlist. It'll be linked down below if you want to watch the other videos. Today we're going to be talking about one of the most interesting dividend plays out there with ticker symbol QYLD. For those of you that don't know, QYLD is a way that you can invest into the NASDAQ, but it's covered calls based off of the NASDAQ. So covered calls means that you are willing to sell your 100 shares of QQQ and they're going to be paying you a premium. This is something that you can do on your own and bring in those premiums, but you do have to own 100 shares. So QYLD is an interesting way to be able to take advantage of high volatility and sell those covered calls without needing to have all that capital set aside to own 100 shares of QQQ. But as the stock market has recovered slightly, it has become a less attractive place to invest. So I wanted to talk about how the changing market conditions have kind of changed my view on QYLD. QYLD is a stock that pays out a dividend monthly, but the dividend payout is not something that's going to be steady. When you look at the normal dividend stocks out there, you're going to have the same dividend payout for around a year, and then the stock is going to decide whether or not they want to increase, stay the same, or decrease the dividend payout. But for 4 quarters in a row, most of the time it's going to stay at the same dividend payout. QYLD is different because they're selling covered calls on QQQ, and that's going to vary month by month. So as it pays out monthly, I'll put up on the screen right now what the dividend payout has looked like for the past couple quarters. It has been very variable. The last dividend payout was 20 cents, 0.97, then it was 20 cents, 20 cents, 50 cents, 22 cents, and it's very variable based off the market conditions. One of the easy ways that you can tell how high of a dividend payout it's going to be is based off of looking at the VIX. The VIX is the volatility index that as volatility goes up, QYLD is going to be paying a higher dividend. And if you've used the past quarter to project for the next year, it's going to be paying out a 12% dividend, so around 1% monthly. This is not going to stay the same. The next quarter, I'm assuming it's going to be close to like a 6% dividend, which is still very nice, but QYLD is a different dividend play than most of them. As QQQ goes up, QYLD is not going to go up significantly. When you look at the past couple years, QYLD does not have fantastic returns. So since 2013, when QYLD was founded, it has an average annual total return of 7.85% compared to 20% of QQQ. When you sell a covered call, you're limiting your upside potential, but if the stock market goes down, you're still going to be paid out that very hefty dividend because as the stock price goes down, volatility is going to go up. You're going to be paying a higher percentage yield, which is very attractive so far in 2022. But as the VIX has dipped below 20, which is usually the level that I look at to see if the market's volatile or not, this dividend payout is going to go down significantly. QYLD is not as attractive as it was a couple months ago, but the reason I have this in my portfolio is a hedge against the overall market, because if things do go down, QYLD is going to be able to take advantage of it, because since I've bought into QYLD compared to QQQ, QYLD has actually outperformed QQQ just because QQQ got hit so hard as the market fell, while I was still getting paid that very nice dividend with QYLD. QYLD is taxed differently than a normal dividend stock. It's going to be taxed based off of return on capital, which is basically if you have, say you have $100 worth of stock, you get paid a $1 dividend, your average cost is going to go down to $99, and it's not going to be taxed until you sell your shares. So it's just something to think about, that it is taxed in a very different way. And you need to be ready for that. And it's going to be taxed when you sell, but I do recommend doing some more research to kind of figure out what your tax bill is going to look like in the future. So QYLD, a very interesting play. It's something where I think it's around 5 to 8% of my portfolio right now, because it's nice to have as the market goes down, but I'm not going to be adding to it significantly as the market goes up, because QQQ is a much better way to invest for the long term. QYLD is good for the short-term chop that we see in the overall market. That's why it was a big part of my portfolio in 2022. As things start to relax slightly, not as attractive of a play, but I'm very curious to hear what you guys have to say about QYLD in the comment section down below. And if there's a dividend stock you'd like me to talk about in the next video, be sure to let me know in the comment section down below. Thanks for watching. If you made it this far, I really appreciate it. Hit the like and subscribe button, and I will see you in the next video. Thanks for watching.